Well, good afternoon, everybody. Welcome to this windy afternoon webinar. I'd just like to say that welcome to everybody, and that if you have any questions or anything, if you'd like to put them in the chat box or the Q&A, and we will deal with them at the end of the webinar. So now I'd like to introduce you to Florence Magee, who's going to give you a webinar on Is Your Business Paying You Enough? So I'll hand you over, Florence. Thanks very much.
Thank you, Mary. Thank you so much, and welcome to everybody. First, I hope everybody is safe and sound and warm. If you're watching it in a replay, we're having a bit storm at the moment. Today, we're going to talk about income and income as a self-employed maker. And my question is provocative. Is your business paying you enough? If it is, congratulations. I hope you can learn something from today. But I will look at tools and strategies to review and increase the profitability of your craft and design business. So it is, I must say, one of my favorite subjects. And I've tried to give you an overview of what is useful within the 40 minutes that we have, that you can action things for yourself and you can understand really where income comes from in your business. Obviously, I do not know your business. I do not have the time to go in depth into all the tenets of what makes income, but I hope that I'll give you a good idea of the concept that makes your income, what can influence it. That's our second takeaway from today. Then we look at a few diagnostics of where in your business things can be going wrong so that you cannot pay yourself, and what corrective action you can take. And then I will give you a few tips to review your management systems to make sure that you actually take the pay for yourself. Right, I've had to make a few assumptions so that we know on which standpoint we're talking, because obviously we're talking finances, so it depends on which business vehicle you have, how you pay yourself and whatever. So I've assumed that you make products rather than services you're already selling, even though if you're not, this will be interesting anyway, because you need to know how to set things up. I've assumed that you're registered as a sole trader for ISO purposes. And then I've assumed as well that you want to make a real income. And it's a bit provocative, but it is easy to just go on selling without actually interrogating how much you actually take from it. So this is why we're here today. Our agenda is very simple. We have a 4-part presentation. First, we're going to take a little look to see how much are people making, because it's easy to see all the Instagrams and all the marketing, and we don't know how much other people are actually taking in their pocket at the end of the month. So I've done a little research. Then I will spend a bit of time on concepts, and I will not go too theoretical on you, not even too financial on you, but for you to grasp a few concepts that are essential in understanding where your income comes from. Then we'll look at our examples, strategies, and diagnostic of where things could be tweaked. And then finally, we'll touch on systems for actually making sure you take your pay. Okay, so for those of you who haven't met me or watching the replay, my name is Florence Magee. I'm a business specialist for the creative and cultural industries. I have an MBA in creative industries management. I've been in the creative industries for over 20 years. I've also been working in arts organizations as a manager for 10 years. I have a professional diploma in finance for non-financial managers. So basically a lot of financial management, but not necessarily accounting, and I'm not a tax accountant either. I also was a hand weaver for 5 years. So I know what it is to actually be producing and selling your products and to be, on your own in the studio. And as you can hear, I'm not Irish, but I'm French, and I've lived in Ireland since '98. I also lived in London for 8 years. I lived in Paris and Amsterdam. So I consider myself a European. Now, let's see, how much are people making? Well, I'll go into the whys as well. Hopefully they'll be, easy to see a few points that go beyond yourself. First and foremost, before we go into the figures, I want to acknowledge that earning a decent income as a self-employed maker is hard. And it's not all down to you being bad at business, being bad at figures, or whatever story you've been telling yourself. It is a very hard proposition. I'll go into details of why I think this is the case, but just to spend a bit of time now to go, it is difficult. Okay, that's not a fast road to fortune. I'm sorry to say. Okay, before we go into the makers part, I want to see how much our people, the other half, the half that's employed, earn in Ireland at the moment. So I'm talking, these are figures of our full-time employees before tax and deductions. Tax and deductions depend on your personal situation, so we don't want to think about that. The minimum wage as of next year will be €10.50 per hour. That's a yearly wage of just over 21,000. That's 39 hours per week. Your living wage is €12.90, almost 13 euros. And that gives you a living wage of just over 26,000. In terms of the average of salaries, I've actually taken the median salary. That means that basically we're not looking at the very low income, we're not talking at the very high income, especially with the tech industry that can push things right up. But know that half of people in Ireland earn more than 38,500 and half of them earn less. So that's your medium part. That's almost 19 euros per hour. Okay, so this is our figures for Ireland. Now, understanding how much our designer makers, particularly self-employed people, earning at the moment is difficult. Not only it is difficult because, well, there's not too many of us, because we're very small, but also we don't easily fit in the CSO categories. So just on a purely quantitative research method, it's difficult to figure it out. There was, so I've taken 3 sources that are people who directly work with people like you. That is the Craft and Design Council of Design and Craft Council of Ireland, Cockpit Arts, which is an independent organization in London, and then the UK Craft Council. So the Design and Craft Council tells us that the average turnover per employee is 36,000. The GVA, which can mean several things, but I'm going to take it to mean salaries and profits, 15,000. It's, again, there's different ways. For Cockpit Effect, which is the annual reports, their average turnover is just over 42,000 and average GVA 15,000. So the GVA is the leftover, the profit. And then the latest report from the Craft Council UK says that over basically all the groups of different makers of different expertise, most of people earn less than 30,000 sterling in profits through selling their works. And even for people who are in business for over 5 years, only 16% of them report profits in excess of 30,000. So we are well below this median income from employed people. So my question is, why are incomes so low in this sector, which is actually developing and doing really well in terms of exposure, in terms of sales? There's such success stories at the moment, but really what I see across the sector is that the incomes for the self-employed makers remain really low. So I have 4, little points of analysis that I may bring to the table. First, because your small business might not have been designed and managed for profit. What I mean is that you need to actually build your profit from the ground up in your business in a way that is aligned with your creative practice, with your business management systems, with what you can bring to your business. Have you used, or somebody used for you, a template that is like a light industry template, a production template, which actually would suit a company that's wider, but larger? So having the right business model, basically, that fits your creative practice, but also your management systems. Do you make sure that your costs are not inflating and eating into your income? Second reason why incomes might be so low is that you're probably very small. If you're listening to this, we know that almost 70% of craft industries in Ireland have 0 or 1 employees. And the amount of people working full-time is about 2/3 part-time 1/3, more or less. So you have a production, a capacity issue in terms of being able to increase the turnover above what one person can do, okay? So there is a natural capacity issue there. Another reason why you might not be earning as much as, let's say, as an employee, is that you're doing it to yourself. And I'm sorry to say, it is really something that is starting to be come to the fore, especially after the pandemic, during the pandemic, is that there is a link between passion and exploitation. There is definitely a link in employed positions where the employer can actually exploit the fact that the employee loves its work. But in the creative and cultural sector, we tend to do it to ourselves as well. And if you are self-employed and you are your own boss, you might not be asking enough of your small business to pay yourself. So you might be ignoring some needs, like your financial needs, because of this passion that you have for your small business. Okay, something to think about. And then final analysis, you might not be actually earning enough because you have a little issue about money. Now I'm going to say, who doesn't have a mindset issue about money among us? We are not raised to actually understand money, how money is created, and to actually create money harmoniously in our businesses. You might feel a lot of internal fears, contradiction in how you actually run your business, which you might be saying that you want to make money, but not taking the actions that actually just enable you to make that money. You might be happy to spend on equipment, on raw materials, on things that you give to your products because you love it, but not actually prioritizing the main person in the equation, which is yourself, you know. And that's my provocation. Are you still thinking like a hobbyist? Are you still thinking that doing it is good enough? You don't need to be compensated, okay? Anyway, questions for you. Now, we're going to go, let me check on time, we're good. We're going to go into concepts. As I said, I'm not going to go too deep financially, and actually you're not going to see, to hear me talk about hourly rate. I'm not going to talk about margins. I'm actually going to take quite a simple view, but something that you can action and that you can use today in your business, okay? So first, let's go back to basics. Where does income comes from in your business? And there's no mystery, but we tend to forget it when you are a sole owner manager and you do everything yourself. There's only one thing in your business that gives you an income. It's making a sale. It's not being on Instagram. It's not researching new materials. It's not, I don't know, taking pictures or whatever. The only thing that actually brings you a bit of money is making that sale, getting that money to hit your bank account, okay? So do you prioritize your time making sales? Do you spend enough time on the phone with your suppliers, with your retail partners, not your suppliers? Do you know how much of your marketing activities, particularly online, turn to sales? You might have a direct link there and it's brilliant, or you might not have a direct link. So sales equal money in your pocket. We know that, but we tend to forget it when it comes to the daily running of the business. The corollary to that is that if you know sales targets for yourself, you have no income target. It's just simple. Second concept, and sorry, my thing is in the middle. Your income is your profit. Particularly as a sole trader, your income is what's left after you've taken out all your costs from your sales, your turnover. So your income is not your turnover, okay? It is the difference between how much you make and how much you spend. And you will, if you're a sole trader, you will pay revenue income tax on it, whether you spend it or whether you leave it in your account, okay? If you are set up as a company, you will be paying yourself, you know, you'll be a separate person, you'll be paying yourself, and the company will pay taxes on its profit and you'll pay revenue on that salary. You probably might know the saying, turnover is vanity and profit is sanity. Doesn't matter how much you make, well, it does in a way, but what matters is that difference between your turnover and your cost. Profit is sanity. I didn't invent that, that's quite known. Now, a bit of fun. Third concept. I'm going to go into the what makes the profit in your business. And you're going to have to bear with me for a bit of a crazy analogy. I'm going to talk about flatmates. So imagine that you're the landlord of a flat. That's your business, you know. And as a designer maker, your business is not making stuff, is actually making stuff so that you get an income for it. So let's pretend you're the landlord of a flat and your products, they rent from you. You know, because you get this piece of real estate, they rent from you. They go out in the world and they get a salary. So that salary is the price they make when they get sold, okay? How do they spend that salary when they get home? Are they sitting at home eating takeaways and drinking Prosecco instead of paying their rent? Right. There's 3 types of costs that your products, flatmates, are gonna have to spend their salary on. One is what keeps them alive. It's their food and living expenses. And they pay for that individually, that your products each have a cost of making for direct costs, materials, and the direct cost of packaging and stuff like that. That basically is absorbed. You know, it doesn't give you anything, it's absorbed in the product itself. They're eating it. Second thing, your products, flatmates, are contributing to the bills, like the energy, the Wi-Fi, the water, the utilities, and they're contributing to it together. That's your operating cost. As a business, you actually spend money on just turning the light on. Obviously, the energy cost, your Wi-Fi, your website cost, your insurance, you might have a studio, all these things that you're gonna have to pay whether you actually make a sale or not before you actually start creating products. And then a second cost is shared among the tenants, is the rent. And that rent is something that you need to focus on. That rent is your income, your taxes, and savings, because if you don't have money in the bank, you won't be able to replace your equipment, okay? And that's your profit that is left after these things. And of course, it makes sense that the more flatmates you have, the cheaper the rent is. The more flatmates you have, the cheaper the bills are, because it's shared between the flatmates. And then the food and living expenses, it's each product is, each flatmate decides on their own, okay? So just keep that analogy. I'm finished with it. Keep it for yourself and just see what it, what it means for your own products. So what we're going to want to calculate is what each product, our guys, contributes to the shared costs. Are they pulling their weight? And it's simple. You tell the sales price. I know that it's different if you sell to retail and you sell to trade. You need to actually have a close analysis. We'll talk about that later on what it brings you. But I would say the price at which you're actually selling it, not the RPP, minus the cost of making the product. That contribution is called the contribution. It's going to contribute to paying for the business expenses, your income, your taxes, and savings, okay? And that is the concept that I want you to actually think about. I'm not going to go down the net margins. I'm not going to go down the per hour ratings and stuff like that, because one is get too complicated. And then everybody is different in how much you expect per hour or your business model, okay? Fourth concept, when do you know that you need to start paying yourself? Okay, just remember, you can only start paying yourself as a business when you paid everybody else, okay? Even if you're set up as a company, it just doesn't do to actually not pay the graphic designer and to pay yourself, but especially if you're a sole trader, your profit, your income, it comes from after all your bills. And in a way, that's why you're not probably paying yourself properly. So you need to know at which point of turnover you actually start making your income, okay? That's called a break-even. I'm going to do a quick break-even analysis for yourselves. Maybe either come back to this or take a copy with your phone, but it's a very easy way of actually seeing how much your products bring you, okay? So let's pretend I'm a jeweler. I make necklaces, and all in all, each necklace cost me 30 euros to make, okay? I sell them for 100 euros. I only sell direct, okay? That's easier. My contribution to the shared costs and profit is 70 euros per necklace. I know that my business costs £1,000 a month to run, so that's 12 grand a year, okay? So simple division, 12 grand divided by 70 euros. I need to sell 171 necklaces for the cost, to pay for the cost of running my business. After 172, I'm starting to make an income, only after 172. So that's called a break-even point. At a turnover of, that's 171, you sell them at 100 euros. So you multiply that. You know that you need to be selling 17,100 of sales to actually break even. After that, that becomes money in your pocket, that becomes your income. Right, last concept. Once you pass your break even, you need to sell your sales goal so that they reach your target income, okay? There's no point having sales goals that actually don't correlate to how much is going to be in your pocket. It's just volumes for volume's sake. So I would like to start thinking about your income as a set cost in the same way that your business expenses are set. And that's when we're going to do a second analysis like the one we just did for your sustainability points. And that's the second thing you should know for yourself. At which point of trading do you actually comfortably pay yourself? And I know that it's a lot harder when you have multiple products, you know, and selling to trade and selling direct and stuff, but it's the principle. Okay, I've decided I'm not going to be too greedy. I want 25,000 a year for my pocket, my taxes, and maybe like £1,000 or £2 to do a trade show, okay? My business costs, we know, are 12,000. So I need to make 37,000 on top of making costs to actually make those figures. Simple, again, contribution analysis for the sustainability. I divide 37,000 by my 70 euros. Each necklace brings you 70 euros for that pot of profit plus cost. So I need to sell 529 necklaces. So that's 37,000 divided by 70 for the year. Okay, if I multiply that by the price of each necklace, which is 100, that's 52,900, almost 53,000 as a turnover figure for the year. That's my goal. If I divide that by 12, that's 44 necklaces a month. Okay, so how does that feel? Is it a lot? Is it not a lot? Every business will be different, but it's a good way to quickly know whether it's actually sustainable or not. Right. Now, we're going to look at a bit of diagnostic, getting under the bonnet, but of course, I don't know your business. You know it better than I. So I've made up a couple of potential scenarios, and you'll see if one or several, probably not all, of these apply to you. Okay. First problem that could occur is that your direct costs are too high. Your flatmates are spending too much on their dinners, okay? They're not leaving enough of the price to actually pay for the share costs and your income, the rent. So you need to check your contribution for each product. Which level are you? In my example, I had a contribution level of 70%. 70 euros out of each necklace went into my pocket to pay for my business, to pay myself and taxes. It's going to be different for each product and each business type, because you might be trading on volumes, having a lot of flatmates and actually a contribution that's small enough, or you might be making unique objects or very high value objects and have a contribution that's quite high per product. And just check, is each product doing enough, doing its bit? Is it paying its way to actually start paying yourself and pay the overheads? So what could you do if that's not the case? Well, first you can see where you can cut a little bit on materials, packaging costs. Maybe it's buying in bulk, maybe it's rationalizing your range so that you have less different types of material or colors so that you can, buy in bulk more. Maybe you want to keep the expensive materials where it matters to the client, or give it as an option for the client to spend a bit more and actually get it made in gold or whatever, You know your clients better than anybody. You might actually decide to increase your prices. My latest webinar was on increasing prices, so it's something you might want to check out on the YouTube. And you might need to cut some products as well, cut your range and be hard on unprofitable products and either offer them on demand or cut them altogether. Second diagnostic, maybe your business is too expensive to run. So that means that too much of the price of each product goes to paying for the business costs. It could be that you have a studio rent. Like when I was a weaver, I had a studio rent, and that was a lot to pay compared to people who just could have shed in the back garden. Could be utilities that are going up at the moment in energy and stuff. Could be that you do a lot of fairs, you pay a lot in terms of stand prices, whatever. So just check how much of that contribution, goes, so that's 70 euros. How much of these actually go to paying for operating expenses of these business expenses? And do you have a break-even point that's just too high for yourself? What can you do? Okay, so what can you do? First thing, your overheads, your business costs, same thing. They're divided per product. So the more products you sell, the lower the contribution can be. Okay, so you need to actually increase how much you sell, how much you produce. You can see where you can cut costs as well by reducing. Maybe you can sublet part of your studio. Maybe you can decide to lease equipment rather than buy. Maybe you cut down on some stuff, or you can increase your prices, which will actually increase the margin of profit per product. Third diagnostic, maybe your sales are too low, and you've worked on your contribution levels, they're pretty good. Overheads are, pretty good as well. But you're just that you could be producing more if you sold more, and you're just not paying yourself. In a way, that's the easiest problem to have because it's not structural. If your profitability is good, then it becomes a marketing issue, marketing and sales. So you just focus on your marketing. You upskill, you actually develop your website, you develop your partnerships with sales, partners, retail, attend fairs, promote your business, the shops that you want to be selling in, set yourself targets, just full on marketing there, and you might need to invest a little bit. But that's a marketing and sales problem, and in a way you have a lot of support from the Design Craft Council for this. Okay, fourth diagnostic, let me check my time, we're doing good. It's the contrary. You're selling well, but you're on a treadmill of making and selling, and you're doing so much, and you're just not quite paying yourself enough. Your margins are good, your prices are high, you have a good follow-up, but you're just reaching capacity and you're exhausting yourself. And it is actually quite a common issue, and it is one of the most difficult issues because then you need to take a different tack. It means that the business model that you have for your business is not quite working with your capacity as a producing person, with your creative practice. Maybe there's some practices that are very hard to actually make an income when you're selling products. So what can you do? And it's going to take a lot of thinking. You might want to look at the webinar that I did on business models so that you see what can be done from volumes to actually unique objects and high value offers. Do you need to actually cherry pick the bits that your clients like the most about your business and actually offer ways that they can pay more for it? You can work a bit less and get a bit more in your pocket. There's not one solution. You are an expert in some materials, in some processes, of the services that you can add so that you can be paid for that expertise, either as a consultant, design consultant, color consultant, whatever, or as a teacher, a trainer for courses. So there's not a one size fits all solution for that. It is really a strategy issue. Okay, fifth, agnostic, again, something that we see a lot is that you both sell to trade and direct. And while your direct prices are fine, the trade prices actually really squeeze your margin, your profit that you're paying yourself. And that happens a lot because of the, the market that the retail has to put onto your products. In a way, the trade brings you volumes of sales. It gives you an exposure that is really hard to achieve by yourself. But what if it doesn't pay you? That's a question of strategy, again, of choice. First, I would say check your contributions. If you're selling to trade and you're not covering overheads, so business expenses, then I have a problem with it, because that's going to be a hard thing to actually come from, if you're actually subsidizing the trade prices. So you want your trade price to at least cover business expenses, overheads, with 12,000 a year. Can you actually lower how much you need to make per product in terms of contribution by doing more volumes? So actually pushing your sales targets up so that you actually have a lower contribution per product, but more volumes. You can also increase your prices a little bit, so you have an increase of profit that comes in. If not, that's not going to be possible because of production capacity, for example. Can you use your sales to trade cleverly so that you only actually trade with a certain type of shops, or you actually use them to spread your products throughout the country or abroad? You use your retail partners as kind of product placement places so that people can actually get your products in your hand and hopefully come back to your website, to your direct sales after that. And do you need to set a percentage limit of sales on how much you trade to sell? You sell to trade, so that you don't exhaust yourself and you actually make enough of the profit directly to pay yourself. Again, there's not one strategy for all, but it's something to keep in mind. Okay, so I'm coming toward the end, and we'll have time for questions after that. Now, once you've established a formula for yourself that actually is profitable, it gives you enough profit and actually fits the production model that you have for your small business, fits the amount of time you have, fits the type of production you have, then you want to make sure that you keep the money. Okay, so we're going to talk about financial systems. And basically it's just how you do stuff, management systems, financial systems. Everybody has a bit of it. I always say systems are like the gym. It's not about buying the membership, it's about going. So you need something that fits your, level of technology, your, preferred way of working, but you need to do it regularly. So our main systems for financial stuff is a system to receive and track payments. Could be through Stripe, could be old-fashioned invoices, could be like dockets at the fair. I don't know what it is, but you need something to receive invoices and to know how much payments came from who and for what product. Then you need a system to pay expenses. And I'm sure people find a way to make you pay. So I'm not worried about that one. Then you need a system to match sales to spend. That's called a reconciliation system, something that most people don't really know about. And I'll tell more on that. And then you need a system to attribute and redistribute your different pockets of money. So we'll talk about that. And then finally a system to keep records for in case revenue wants to make an audit, or for yourself to go back over it year after year to look at your figures and see maybe your costs have increased, or you spent more on buying equipment, but that your sales increased or whatever. That's for your own analysis. Okay, now talking about systems to receive and track payments. As I said, you might be using online bookkeeping system like Xero. You might be using Excel spreadsheets like I do, but you need to actually set yourself a finance date. It's not a sexy date, but just setting aside a couple of hours a week will really just make everything go smoothly, basically. And that will be the time where you go through your finances, you go through your invoice, you check your costs, you just like put everything in order. Instead of doing it once a quarter, once a year, when it's your tax return, you need to do that regularly. It's hygiene. Then you want to review your credit terms. So if you work with trade partners, you might have like a 30 days on invoicing, or if you work on commissions, you might have a payment plan with your clients. So you need to know when the money is going to hit your account, and you need to know when to chase. And then finally, you want to call in overdue payments straight away. Just once the 30 days is gone, or if somebody is late paying, just tell them nicely. Tell them after a week, tell them after 2 weeks, tell them, just keep on it. Also, make sure that you change your communication methods, and always try to have, if it's big amounts, a phone number and an email for people, because they might lose their phone. You don't know that, just assume people want to pay you, because we get a bit, all worked up when it comes with somebody owing you money. So second, systems. We want to match your spend to your turnover. So I talked about that contribution level, unless you know how much each product costs to spend, costs to produce directly, you won't be able to have those figures, okay? So you need to create a system that matches the direct costs to the sales, okay? Could be an Excel spreadsheet, could be anything, but you need something that actually attributes the spend to the product. One way of doing it is to create codes. Like I have codes for the organization I work in as well. And you might say like product necklace 1, code 001, necklace 2, code 002, blah, blah, blah. And then you actually have the sales on one side, have the raw material, the packaging on the other side. You divide, obviously you're doing batch probably, so you need to divide that by the amount of products you got out of that, and just have always your cost and your income relating to the same product, so that you're able to see is your contribution, which is your gross profit margin, by the way, is it big enough? And then, of course, a code for overheads or several codes for overheads, so that you can just know that all of these expenses, that's your business expenses. Maybe it's going up, maybe it's going down. And then you need to go through that, either your bank statements or your Sage or Xero statements, and that's called reconciling. So telling the system, well, this spend is for this and this spend is for that, and just attributing it. Then finally, attribute and distribute. And what that means is making sure that you don't spend the money on something else. And because you might have a very profitable business, but if you increase your costs as you increase your turnover, then there's never going to be enough in your pocket, especially if it's the last thing you do. So you need to figure out your product's contribution, your minimal contribution, gross profit margin. I'm saying the word margin, I said I wouldn't, but how much does each product, it can be different for each product, need to contribute to that pot, that common pot of business expenses and income, okay? And then you need to make sure that you don't touch that, okay? So that you, of course, costs might go up and down a little bit, but you want to ring fence that amount. Maybe you want to actually use another account to be paying your business expenses and then yourself. And some business expense only come once a year. If you use, your insurance only comes once a year, or a big trade show only comes once a year. You need the money in your account for that. You also need the money in your account to pay your taxes, because you might have been happily paying yourself every month, but once it comes time to pay your revenue bill, you haven't set enough aside for it. So I can't tell you how much to put, but you need to actually ring fence it. And then finally, one of the best ways to make sure that you don't actually, spend your income is to take it out of your business account into your personal account. So you siphon out a safe percentage again, I cannot tell you exactly how much, you know, of your overall turnover, but, you know, something that's not too much. Just to give you an idea, the net profit margins we see in general about 35%. So if you actually 30% would be safe. And then you can review your sales every quarter and just pay yourself a bonus, something like that. You know, just, you know, your level of turnover better than I do. But just find something that feels like it might not be a lot, but starting to pay yourself regularly will probably do a lot for your mental health, and also for the business to not have to rely on your income. Okay, what we've learned, a recap. So we've learned as a sole trader that your income comes from the difference. I know it's silly, but we use often the word income for sales. They're not the same, you know? Sales, turnover, revenue, that's the same thing. Income and profit are the same if you're a sole trader. Okay, so try not use the word income for turnover because it's actually quite confusing. It's the profit, that's the important thing for you. And each product must make that profit. So that product must pay for itself, but also pay for the business expenses, the income, the taxes, the savings, you know, and you must make sure that the contribution of each product is enough for the type of business you have, the level of productions, the volumes of productions that you have, and of course the prices. So you have really high prices, the contribution might be a bit lower if needed. Okay, so you should try and figure out for yourself, what's your break even? You know, at which level do you actually start putting money in your pocket rather than paying what it takes to actually do the work, you know, so it's not a running to standstill situation. And then your sustainability point, so how much you need to sell to actually pay yourself. And that, you know, it might be good news, might be bad news, but it's something that you need to know. And I appreciate it can be difficult with loads of products. We've looked at diagnostics of why you might not be able to pay yourself and what you can do to tweak things. Again, there's not a one size fits all, and it takes really knowing your business and your figures to actually make the right decisions, but you know, you can tweak it. And I think it's something that you really, you know, should keep in mind for yourself, that you are in charge of your business. If you do not want to be, you know, making and selling hundreds and thousands of items at low cost, you don't have to. You can choose to change every bit of your business if it is done in a way that stacks up financially. Then, once you've done that and you find a formula that works for you, you need systems to make sure that you actually pay yourself. You chase after money that is due. So don't leave money on the table. It won't do anybody any good. Monitor your costs and actually start paying yourself, attribute that income. You need to set limit on how much your business spends so that it just doesn't, you know, just get, well, you know, fatter and fatter, and you don't pay yourself. You need to treat your income as something that is set. And one way to do it is to actually take the money out of the account, you know, make sure that it's not there, and you pay yourself, and you might review how much you pay yourself depending on sales, but it's something that you do proactively. My final thoughts for this webinar, but it's probably just the start of conversations, is that paying yourself shouldn't be the last thing you do as a business. It should be the first thing. It is the reason why you're a business, and you are, as the maker, the only reason the business exists. So if you cannot survive, the business does not survive. So if you put yourself first, how would you do things differently? So I'm looking forward to hearing your comments on it. Thank you for sitting through this with me. You can connect with me on Instagram and you know, on Facebook, Twitter, and through my website as well. So I hope that was useful.
That was great. Thank you very much for that, Florence. I have one question in here just asking, is there like a popular financial system that you would highly recommend that a lot of people use just to track, like to keep track?
So when, I don't know if the person's still here, but in terms of financial system, are you meaning a bookkeeping system?
Yeah.
Bookkeeping. They are several. People use Sage. People use Xero at the moment, which is maybe a bit cheaper than Sage. There's Intuit, QuickBooks. And basically, these are softwares that go through your accounts and enable you to actually pull stuff from your bank account so that you can run reports on it. They won't make that attribution system. They won't make it for you because they're not intelligent. You need to tell them, that spend was for that type of necklace and that spend was for the other type of necklace. So in a way, whether you do it, they are faster than just doing it through Excel, but you still need to actually set the system yourself. But we don't have time to do a bookkeeping system here, But yeah, do check, and there's a lot, there's a lot you can find online in just setting up a simple bookkeeping system for yourself.
Okay, that's great. Thanks very much, Florence. There doesn't seem to be many more questions. There's a good few people saying, thank you very much. It was so helpful. Aoife said, Sarah said, thank you, great talk. Dan Taylor, Florence, that was a wonderful presentation. Dermot, thank you for a great presentation. So just thanks very much for that, Florence. Very good. Very, very simply put and very easy to understand. So thanks for the clarity on everything.
Brilliant. Thank you very much. Thanks to everybody.
Take care. Thank you. Bye, everyone.